Welcome back, everybody, to my channel where you subscribe for a video on everything going on in cryptocurrency. Today we now be talking about South Korea's new 20% capital gains tax on cryptocurrency and what this means for global traders. South Korea has been one of the most bullish countries on crypto in the entire world. And even though they are introducing a 20% capital gains tax, it's not necessarily a bearish thing. So make sure to watch until the end to find out why. Before we get into today's video, like always, I do want to remind you that I am not a financial advisor. You should always do your own research, and you should always do what you feel is best for you. With that being said, let's get into today's video. Okay, so let's get into the main subject at hand. The government of South Korea has been working on this tax plan for quite some time now, and they have just announced that as of January 2025, there will be a 20% capital gains tax on cryptocurrency. But before you run to the hills or to the Bahamas, there's a few things that you need to know about this particular tax. First, you're probably wondering why they are doing this. Well, this is very simple. South Korea has one of the highest crypto adoption rates in the entire world. They also have one of the highest GDPs in Asia, which is around $1.7 trillion. And with all of these people trading cryptocurrency, the South Korean government wants their fair share of the pie. And what better way to do this than through a capital gains tax? Now, the government isn't stupid. They aren't just gonna implement a 20 capital gains tax on all crypto gains. There's a bit more nuance to this than that. And if you're a high-volume trader or investor, this is definitely something that you need to pay attention to. Now, the first thing that you need to know about this tax is that there is a threshold amount of crypto gains that are non-taxable. That number is 2.5 million Korean won. Now, you may be asking yourself, what is that in US dollars? And as of recording this video, 2.5 million Korean won is roughly equivalent to 1948 US dollars. So basically, any crypto gains over 1948 US dollars will be taxed at a rate of 20%. Now, 1948 US dollars might seem like a lot, but in reality, this is only enough for a little over 1 Bitcoin. So when you think about all the people who are day trading and swing trading and investing in altcoins and NFTs, it's not hard to see how they would surpass this limit and incur taxes on their trades. Now, you might be thinking, okay, well, I just won't trade that much. I'll just keep my gains below that threshold and I'll be fine. But unfortunately, this is where the second nuance comes into play, because the South Korean government isn't just taxing your crypto gains from trading crypto. They're also taxing any interest that you receive from staking or earning rewards on your cryptocurrency holdings. So, for example, let us say that you have 1 Bitcoin and you decide to stake that Bitcoin to earn some yield. If the value of that Bitcoin increases by, let's say, 1 OK, then you would owe taxes on that 10K gain. And if you were to sell that Bitcoin for a profit, you would then owe another 20% capital gains tax on top of the taxes that you already paid on the yield that you earned. Now, I know this might sound a little confusing, but basically what this means is that you not get taxed on your crypto gains no matter what you do with them. And the only way to avoid those taxes is to either 1, not make any money on your trades, or 2, keep your gains under the 2.5 million threshold. Unfortunately, though, option 1 is not really feasible since the market is constantly fluctuating. And option 2, well, like I said earlier, it's not hard to surpass that threshold. So what does this mean for us? First of all, this is a sign that shows that the South Korean government is taking cryptocurrencies seriously. This is no longer a niche asset class that they are ignoring. They see the potential of crypto and they want to get their hands on some of that pie. Second, this could be an indication of things to come. Other governments around the world are watching what South Korea is doing and they may follow suit. This is especially true in countries with high crypto adoption rates like Singapore, Hong Kong, and even the United States. So it's as important to start thinking about how you will handle taxes on your crypto gains, no matter where you live. Third, this is a good reminder to keep track of your trades. If you're not keeping track of your gains and losses, then you're in for a world of hurt when tax season rolls around. Even if you don't owe any taxes, it is still a good idea to keep track of your trades, so that you can easily prove it to the authorities if you need to. Finally, this is an opportunity to learn more about cryptocurrency taxes. The IRS considers cryptocurrency to be property for tax purposes, which means that you have to pay capital gains tax on your profits. But there are a lot of other rules and regulations surrounding cryptocurrency taxes that you need to be aware of. So take some time to learn more about them so that you can avoid any surprises down the road. Now, I know this might sound like doom and gloom, but it's not necessarily a bad thing. The South Korean government is implementing this tax to help regulate the market and protect investors. As cryptocurrencies continue to grow in popularity, it's likely that other countries will follow suit. So it is important to start thinking about how you will handle your taxes now, so that you are prepared in the future. So this brings me to the next point that I want to make. Many people are saying that this will hurt the South Korean crypto market, and that people will just move to other countries with more favorable tax laws. But I don't think that this will happen for two reasons. First, South Korea is one of the most active crypto trading hubs in the entire world. People don't just move there because there is a 20 capital gains tax. And second, most people who are trading cryptocurrency are not doing it in order to make millions. Yes, there are some people who are making millions and even billions of dollars off of cryptocurrency. But the vast majority of people are just regular folks who are trying to make a little extra money. These people are not going to move to another country just because there is a 20 capital gains tax. Finally, I want to touch on the idea of offshore accounts. Some people are saying that this tax will not affect them because they have an offshore account in a tax haven like the Bahamas. But this is not the case. The South Korean government has been cracking down on offshore accounts lately, and they have even gone as far as to shut down some of the largest exchanges in the country. The reason for this is because they want to make sure that people are paying their taxes. And if you have an offshore account, they can easily track it down and shut it down if they want to. So, if you're thinking about opening an offshore account in order to avoid this tax, it's probably not a good idea. So overall, I think that this tax is a positive development for the crypto space. Yes, it's never fun to pay taxes, but it's important to remember that cryptocurrencies are still relatively new. And as the space continues to grow and mature, we will see more regulation and oversight. This is a good thing because it will help protect investors and ensure the long-term success of the industry. I think that South Korea is taking the right step by introducing this tax, and I hope that other countries will follow suit. Let me know what you guys think about this new tax in the comments below. Do you think it's a good thing or a bad thing? And do you think that other countries will follow suit? Let me know your thoughts in the comments below. And if you enjoyed this video, make sure to smash the like button and subscribe to the channel. I post videos every single day demystifying this cryptocurrency market. Until next time, see you guys later.